But one sector which is in pink of health is wealth management. Asset managers are witnessing a lot of good flows. Anand Rathi Wealth is in focus. Rakesh Rawal, CEO of Anand Rathi Wealth, is now talk to us about the first quarter numbers. Rakesh, good morning. Thanks so much for your time.
My pleasure.
Well, the flows are speaking for itself. Well-run wealth management companies such as yours, but is it now getting are your client community getting a little jittery? Do you have the same visibility on flows and asset which you have actually kind of collected over the last few years? The next 2-3 quarters could be the same.
Yeah, I think as you know, we look at things on a little more strategic basis, which means that we tell the clients that they need to work on an objective of 14% return, which means that they need to have a certain allocation to products. And as long as there are monies outside with my clients, which is increasing penetration and new clients being added, that has very little correlation to what is the state of the market. And this is true, for example, year before last, when the markets were flat, we still grew our AUM by 17-18%. So I don't see the state of the market significantly changing the direction of the flows that we are getting.
Mm-hmm. Right. That's an important point. What are your measures you're taking to really improve your distribution, feet on ground, essentially, the RM army which you have right now? How is it, what's the plan for the full year to take it higher?
Yeah. So we, 1 year ago, I think we were closer to 308. Today, we are closer to 360. My own sense is that by the end of the year, we should be closer to 400 or thereabouts. So the feet on ground are increasing. But I think the more important thing is that RMs who've been with us for more than 3 years are controlling 80% of my assets under management. And the attrition rates are zero for the last 1 year. So of regret attrition, which is RM's more than 40 crores of assets that they're managing. So the important thing is, of course, to bring in new people, but the more important thing is to retain the existing people, because as they grow, they become very valuable. And therefore, that is our focus is on both, to retain as well as to add.
Rakesh, the one factor that everyone's been talking about, especially for businesses such as yours, is, I mean, from the COVID lows, we've pretty much seen a one-way bull market, right? And I'm not talking about a few patches of correction or consolidation, if you will, here or there. Given that it's been such a parabolic run-up and a one-way street, would it be fair to assume that whenever the market stalls, flows also would get impacted, and thereby businesses like yours too?
Well, the fact of the matter is that the confidence of the investor, to some extent, is correlated to the sentiment of the market. Yeah. So it's easier to get flows when it's backed by confidence. When you have a little bit of a turmoil, then you have to put in more efforts to build confidence. And I think that the past has shown that, hey, if we put in that extra effort, the direction of flows don't change. So yes, if the markets are a little turmoil oriented, we'll have to work harder. And, we are quite up to it. And therefore, directionally, I think that the flows will be very healthy for the rest of the year.
Rakesh, how's the mix looking versus, in debt, equity right now? And the incremental flows, are they coming towards debt higher?
No. See, our strategy to our customers is that if you want to get 14%, you need to have about 60-65% in equity mutual funds, and close to about 30-35% in structures. So debt has very little meaning in the way that we are sort of conducting our business. And therefore, though, of course, there are some clients who want to keep some levels of debt, I don't see that changing. In fact, the proportion of debt is coming down for us, and the proportion of equity is going up. So from 48% of our total mix of equity funds 1 year ago, we are closer to, I think, 52, 54% now.
Okay, Rakesh, great to have you on the show, and good luck for the future quarters once again.
Oh, thank you very much. Thank you. Thank you for having me.
If you like this video, then like, share and subscribe to ET Now.